What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to What's Making Headlines. It's a new team makeup this week. We've got a special guest joining us, Ben Squires, as usual, my co-host here on What's Making Headlines. But joining us for the first time on this show is Emilie Lauer, our colleague over on the property titles, who heads up First Property Buyers. Welcome, Emilie. How are you going?
Thanks for having me, guys. Lovely to be here.
Very exciting to have you on the podcast. And this week we thought we'd bring you on because so much of what people have been talking about, so much of what we've been writing about has been about the new expanded home guarantee scheme. And given that you write so much in the property industry and for first home buyers, we were like, it'd be great to have a cross collaboration and see what you were seeing from the consumer side of things, and we can talk about what we're seeing from here on mortgages. So first up, I think everyone would have probably heard about the expanded home guarantee scheme this week, but if not, where have you been? Probably living under a rock. I feel like you could not turn around this week without someone telling you about it, or a headline, or being on the TV. It was everywhere. My LinkedIn feed was just full. My Instagram feed was full of home guarantee things, stories and posts. But first up, I guess, for those of you who might not have seen it, let's run through the changes. So Ben, you've been well across this. What has sort of been the key takeaways for you from the new expanded scheme?
Well, it's been coming for a while. I think we've known about it for a while. And because, property is such a massive topic in this country, and one of the biggest issues is how do we make property more affordable for first home buyers. Obviously, this new, the new guarantee scheme has obviously gotten a huge amount of attention. But yeah, basically letting buyers secure a property with a 5% deposit and sort of removing the income limits and increasing the size, the values of property they come under the scheme. Yeah. The big changes.
So you have to be 18 years old, you have to be an Australian citizen or permanent resident, and for the first home guarantee scheme, you can't have bought a property before. Whereas previously, if you had an income of a certain amount, you could apply for it. Whereas now, they've removed those limits. You can earn bajillions of dollars and still qualify for the first home guarantee scheme, which means you only need to save a 5% deposit to get a mortgage, and you don't even have to pay lender's mortgage insurance, which you normally would need to pay if you don't have a 20% deposit. So this is exciting news for a lot of people, and the property price cap increase is very exciting for a lot of people. I mean, finally, we know how property prices have been escalating very quickly, and they were pretty low before in some places. So they've kind of adjusted those as well to make more properties fall into the guarantee scheme. Emilie, what are you seeing on the ground from consumers?
Yeah, look, I think I just want to point out also it's only for owner-occupiers.
Yes.
So if you were a first-home buyer thinking about reinvesting, well, this scheme is not for you. Like, some other stuff are available, but not that first-home guarantee benefit. Now, from a consumer perspective, which is quite... we got some data from Agile Market Intelligence Consumer Pulse Survey on, the consumer side of things. And 45% of Australians do understand that scheme. Now, 31% are actually unaware that the scheme exists. So I guess people do live under a rock.
Maybe they do live under a rock.
They do live under a rock. And we've got about 24% that held misconception around the scheme, which I think is quite interesting. And it shows that there is, an education prospect and maybe having a clearer path for people to actually understand what the scheme is about and how to apply to it.
Yeah, and I think a big part of some of the misconceptions is because there were quite a few government schemes for home buying. So there's the First Home Super Saver scheme where you can put up to $50,000 into your super to save for a deposit. There's the incoming Help to Buy scheme. Who knows when that will be launched because it's been long delayed, but that's the one where the government will actually help put money towards your property price. So 30% for an existing stock, 40% for a new build. So they'll actually part own your house with you. That's the Help to Buy scheme. So I think there was some confusion from respondents in the Consumer Pulse tracker because they were kind of confusing those other schemes with this one. So not necessarily knowing exactly what it was. But I think part of this confusion has also led the government to seemingly change the name of it, because it has always been known as the First Home Guarantee Scheme. But they launched a new website this week on Wednesday when the expanded scheme started, and they're now calling it the Australian Government 5% Deposit Scheme, which
Very clear.
very catchy.
Very clear.
Super catchy. But at least you know exactly what it is now, the Australian Government 5% Deposit Scheme. So that's now apparently the new name. They haven't said that's the new name, but that's just what they're calling it on this new first home buyers website.
Yeah, some of the misconceptions also comes around stamp duty, with 9% of consumers believing that the old scheme erases stamp duty, when we know that stamp duty depends on each state. And I think that's a lot of issues, when you are first home buyers, you've got to be very careful about what's available in your state.
Yeah.
So some of the states are, removing completely stamp duties. Other, they've got like a price cap-ish. So depending on how much is the price of the property, you have a reduced stamp duty. Or otherwise, you can pay full price.
Yeah, and of course, stamp duty is a state-based government thing, not a federal government thing. So there's always crossover, and there's also loads of state government schemes and grants available to first home buyers as well. So generally, I think pretty good news if you're a first home buyer looking to get into market. And I think from that survey, quite a lot of people were thinking about getting into market, actually bringing forward their purchasing plans because of this expanded scheme that they now qualify for.
Yeah, so 25% reported wanting to use the first home guarantee scheme within the next 2 years. And 16% said that the scheme has accelerated their willingness to buy a house, and 5% of consumers reported it planning it to use before the end of 2025, which is within the next 3 months, which is pretty. I feel like if you are part of those 5%, you were already thinking of buying a house, and you've already dwelling on apartments, because I don't think, not everybody is able to afford a house. But I think you were already doing your due diligence. So you had already your finances ready. You had already maybe spoke to a broker. You had already an idea about what you could buy and what you wanted to buy. Otherwise, if you have to start the whole process, well, you got to be fast, because the market's moving.
It is moving fast. And actually, I know, Ben, we've been talking earlier about what brokers have been seeing in terms of demand. But what I did think was really interesting in the Consumer Pulse tracker was that even though mortgage brokers write more than 3/4 of all home loans in Australia and are growing that proportion because they provide so much financial education support, they really help particularly first home buyers with their purchases. Even though all of that would make you assume that first home buyers using the home guarantee scheme would want to go through the broker channel. And we know historically as well, the last few years that it's been around, they have been the dominant channel for people accessing the scheme. But in this survey, they were the smallest channel that people said they were going to use, which really surprised me. So just looking at this survey, so for context, it was conducted between the 3rd of 29th of September and asked 1,358 Australians about their awareness and sentiment of the scheme, as well as a whole range of other financial questions. And only 28% of prospective home buyers, those who said they were going to buy, said they would be most likely to use a broker to apply for the expanded scheme. Most of them, 36%, said they'd do it themselves, and 36% said they'd go to a local bank branch, which really surprised me. What do you guys think about that?
Yeah, it's very surprising. Ben, what's your take on it?
Yeah, it is. I wonder why that is the case, actually, because we had a story actually earlier this week where we were talking to several brokers and representatives from aggregators, and they were saying there's been a huge amount of interest, a huge amount of people going to brokerages and talking about how they can use the scheme. I think Loan Market CEO David McQueen said pre-approvals were up 29% compared to the same time last year.
And I think all the aggregators, all the brokerage brands have been really seeing that as well, like a huge amount of influx, pretty much because rates have been coming down this year. So we've had 3 rate cuts this year, which means home loans are a bit more affordable. So because of that, we're seeing a lot more people thinking about getting into market and maybe servicing for a loan that perhaps they couldn't have done before. But also because of this new expanded scheme, it was actually meant to start on the 1st of January, 2026, but they brought it forward. So it obviously started on Wednesday this week. So I think that's been driving a lot of demand as well.
Yeah, so it is interesting to see that disconnect. But yeah, it will be very interesting to see what happens in the immediate future in the next few months. What happens to house prices, how many houses we see sort of go off the market and that kind of thing?
Yeah.
And is there enough supply to cater for all these people?
I think there's a misconception there because, on the First Property Buyer Show, we're talking to a lot of people that have been first home buyers or that are still first home buyers because they just bought their first property. I think there is a misconception that broker would charge you, if they were to make up your loan. Well, we know that, the bank pays the broker and you as a consumer, you do not have to pay the broker. And I think there's also a question of trust, yeah? So, and look, in property, you're always talking about, building that trusted team around you. And that's something that you're like, okay, how do I do that? How do I trust people? And I think at the end of the day, it's a question of feeling. So when I had to buy my property, we saw 3 different mortgage brokers. We could have seen like even 4 or 5. I mean, they all at the end of the day offer the same type of loan, like they cater. But we ended up going with someone that was a little bit older. She was a lady. She had like a bit like that mom support. And that's why we went with her, because we had a good feeling.
Yeah.
So I think, like for first time buyers, they don't have that knowledge that they don't have to pay anything and that they should see multiple people. And I think it's quite scary also because you have to go through your finances and you don't know how much you actually spend each month.
Yeah, it's eye-opening.
Oh
Yeah.
my goodness.
Yeah.
Like,
I never realized how much I spent on coffee. Wow. That's kind of embarrassing.
it's mad,
embarrassing.
It's yeah. But I think we all do.
Coffee and skincare are my two big expenditures, like my most common frequently expenditure. But I think those are the sort of things, absolutely using a broker to help you go through it. And the other thing that I actually thought when I was reading this Consumer Pulse survey, which said that only 28% of people were going to use a broker, was that I was like, well, these are people who have not yet bought a home.
Yeah.
They've not yet gone through the process. They don't yet know the joys of all of the paperwork that you have to provide. And I think maybe once they start going down that journey, even with things like the new government website for first home buyers, providing a lot of resources, a lot of information, a lot of tools to help you understand what you need to do, when it actually comes to how to apply, you have to go through the website and then it takes you to each lender's specific landing page. And then you have to go through that whole process yourself. I think that is where a lot of people will be turned off, because there is so much information you need to provide the bank and that you need to really know about to really get the most, I think, out of this. And I think that's where perhaps, even if people think they're not going to use the broker channel, or only 28% think that's your predominant way they're going to access the scheme, I think maybe once they start the process,
100%.
that might change.
100%. They will. Also, lenders will have different rates. So some lenders will have higher rates for first home buyers using the 5% scheme. Others will not. More guarantees. So I think, having a broker streamline that process when it's already such a stressful process.
Yeah.
Oh, definitely.
And I think also that, because we're expecting so many people to move quickly and take advantage of the home guarantee scheme, there's going to be probably, I imagine, long delays at the lenders as well, in terms of, they're just going to have a huge amount of demand. So I think previously, for the guarantee schemes, there were 50,000 places made available. Not all of those were for the first home guarantee scheme. But moving forward, that it's unlimited. So the Treasury stats, I think, say they expect 70,000 people a year to be using a guarantee of some sort. I think that's going to be higher. And if you think of 70,000 people all wanting to get a loan from their lender, or one of the many lenders on the panel that you can access, that's a lot of people waiting. And how nice would it be that if you don't have to be the person on the phone waiting for the bank to tell you whether or not your loan's approved, if you can actually use a broker to do that?
I guess in a perfect world, the unlimited places means people don't only have to all rush in at once, but I guess property prices are going up.
Yeah.
At the same time. So.
And the stock is going down also. It's not only like the prices. I mean, prices are going up, which is like already incredibly stressful as a first-time buyer. But the stock is going down. There's not that much stock available on the market.
Yeah, and talking about, I think, the supply and how many people are going to be buying properties and what properties are available. This is a big conversation I think we've been having this week from across the board in broking and also in real estate about what is happening to house prices and what does this mean. We'll get into that just after this message. So, Emilie, just having a look at what you're seeing in the property markets and what consumers are telling you on First Property Buyer, what sort of things are you seeing in house prices at the moment? And what do you think this scheme will do to them?
So house prices have been increasing like quite steadily over the year already. We just had some data that we've had the highest monthly rise since October 2023. Across Australia, which was a 0.8% rise.
Totality,
yeah, which is about 18K, which is pretty big already when you have quite a strict budget, yeah? And I want to remind, my listeners who are first-time buyers that please take a buffer into consideration. Do not go too high because you never know what happens. So make sure you include,
furniture, the cost of furnishing a house once you bought it.
No, like hot water tank exploding,
Oh, okay, yeah.
My one died 10 days after we moved into the property.
Yeah.
So that was an extra 2K.
I moved into my house in 2022 that I bought, and the next day the roof flooded. So that was fun.
So thanks
it
for
was
the
during
buffer.
It was during those 2022 floods, and yeah, we had a leak in the roof, and I was a bit like, well, that's going to be expensive. Interestingly, though, just hot tip for anyone, we ended up claiming on our house insurance, thank goodness for home and contents insurance, because that was the only way we could get a builder to come to the house because they were so busy fixing everyone's roofs and, fixing all the issues from the flooding. So the insurance company was like, we'll arrange for someone to come and fix this for you, which was great because we tried to call everyone ourselves and no one would take it. They were like, we'll see you in 6 months, basically. And I was like, our house will have collapsed by then. But yeah, so we claimed on the insurance policy, which was good in the fact that we got it fixed quickly and there was no further damage. However, our premiums have gone up so much more. It would have been cheaper for us just to pay in cash to somebody. So I'm like, actually, that is not really benefiting us in the long run. It's actually been more expensive.
Yeah.
So that's interesting to me.
But yeah, definitely get a buffer.
Yeah.
You never know what happens to...
Never know. Boiler might explode, your roof might collapse.
Yeah. So look, property prices are increasing. We've got a low stock market at the moment, so it's a hot market. There is not as much stock as usual. So there is not as many properties available. Now, when you're first home buyers, you're always targeting the same type of property or the same price range, yeah? When you are going into, so for example, in Sydney, you can go up to 1.5 million as a property with the 5% scheme. But if you go there, it means your repayments are going to be pretty high, yeah, around like 9K. So first-time buyers, first-home buyers, they're pretty much targeting, like the under 1 million type of categories or just around the 1 million, simply because they can also claim lower stamp duty, which means that these type of properties, they've seen a surge in buyers and you're just seeing more and more people into inspection. So there's more demand, more competitions, which pushes prices up. And you might miss on properties. So you might, find a property that you really like, but this one's not for you because there's someone that is bidding, higher or putting a more, a price up more. Now 5% deposits equal 95% mortgage also. So you got to take that into consideration. And agents on the grounds, they are conscious that there is more education to do. So they will have to educate first-home buyers more because they have more questions. However, they still work for the sellers, not for the first-home buyers.
We were very surprised about that when we bought our house. I was a bit like, talking to our estate agent a lot, but I was like, really? He's paid by whatever he sells his house for, so he's going to want to push the property price up. So you kind of have to be very careful with what you're telling them.
Yeah, my hot tip is never give them your budget, and that's an agent who told me that. Yeah. If you give them your budget, they're gonna try to push and max it. Yeah. If you don't give them your budget, give them a range, around 1, or something like that. Then you can negotiate. However, agents are also conscious that the buyers of today's are the sellers of tomorrow. I know it's very cliche, but you got to play the long-term pipeline lead generation, for agents. So if you give a good service, if you be fun and like very helpful, they will remember you.
For a real estate agent, you
Yes.
mean? Yeah. I think just also looking at the supply issue, I mean, this is, again, something that we've been talking about constantly. And I think this week, as we've been talking about the home guarantee scheme, nearly everybody has been like, but what will this do to prices? And I think both Catality stats that we were seeing for September, those stats, were kind of suggesting that really they expect property prices to continue increasing because of the home guarantee scheme. But they were saying really maybe it's around bringing forward demand that was already going to be there rather than adding to demand. What's sort of the go with that, Ben?
Yeah, I think that was kind of the idea with the most recent Catality research. And it was really interesting to see this data just sort of capture the period immediately before the scheme comes in. I think it'll give us a good sort of sense of comparison. But as you sort of said before, prices are up. Interestingly, I think the cities that saw the sharpest increase in prices, Darwin, Perth and Brisbane, were the ones which had the lowest advertised stock levels, which kind of makes sense.
Lots investor-heavy markets as well, those ones.
Yeah, potentially as well. And they were saying listings were well below the average, like around 18% below the 5-year average, while sales are above average. And that's kind of created an interesting sort of dynamic as well.
And the pipeline as well is probably not really looking that promising. We had some building approvals data come out to see how many houses are actually being built, and that's falling. So again, we've got this perfect storm of more borrowers and buyers wanting to buy a property and fewer properties available currently, and really in pipeline, probably fewer in the next couple of years because we haven't got the approvals going.
Yeah. It was interesting, though. We got some comments from Eliza Owen, Catality's head of research, and she made some interesting points in that, as you were saying before, it could be a short-term boost and sort of bring forward demand that would have happened anyway. But she also mentioned that, other factors such as interest rates and supply are sort of more likely to have greater impact on demand in the long term. She was sort of saying as well, like, just because you sort of qualify this for the scheme doesn't mean you'll be able to get your mortgage and that kind of thing. So,
yeah, and I think Emilie's point as well, for consumers, super mindful that even though they might be able to buy a property, if you're paying back $8,000 or $9,000 a month, that's high.
Yes.
It's high.
Yeah.
Very much high.
It's not fun.
You gotta stay around what your rental is and what your affordability is, to make sure you can, still have a life. You don't want to leave for repaying your mortgage. You want to, live and enjoy your property.
Yeah.
I think one of the things we've seen also on the market and what's, like experts have been saying is to free some stock, you need to help all the Australians to downsize their property. And once you have that downsizing, the stock they have will be able to benefit, like young family, first-time buyers. So I think there's definitely that perfect storm boiling.
Yeah.
And I think there's multiple avenues there that the government can actually implement to help free some stock.
Yeah, absolutely. Although having said that, even if people do downsize, I can't imagine many of the houses they'd be downsizing from, if they're big family homes, would be within that 1.5 mil limit for the guarantee scheme, at least here in Sydney. So it would help the broader market. I'm not sure if it would help that many people wanting to use this specific scheme.
Yeah.
We'll take a quick break here. When we come back, we talk about some of the other big news that's happened this week, including the interest rate decision from the Reserve Bank of Australia and what that means for the cost of mortgages and home borrowing. And we'll get into that just after this. So on Tuesday, we had the September-October rate decision. I say that because it was on the 30th of September. So it's more like the October rate decision from the Reserve Bank of Australia. And this is obviously around the official cash rate and what that means for how the cost of mortgages. And on Tuesday, pretty much everyone ahead of it was saying, we don't think there's going to be any change to the cash rate. And they were right. Absolutely zero change, which is good for some people and not great for others. So I think a lot of people had hoped maybe we'd see another cash rate cut, but we'd only had one 6 weeks ago.
Yeah.
In August. So I think, having another one quick succession, there wasn't really the need to do it. And we heard from Michelle Bullock, the central bank governor, and she was sort of saying that, again, there's not really, the economic data is not telling us that we need to move quickly. People aren't really seeing that we have to kind of reduce rates to free up some more flow. Things are kind of going well. Unemployment is still pretty low. Inflation is sort of rising, but not really we have to wait for quarterly figures before we can kind of make that call. And people are spending more. So, they're not showing any kind of real tension or constraint at the moment. So spending data is going up. So I think generally the Reserve Bank Monetary Policy Board were like, we don't need to do anything this month. We'll wait and see what we do for November. But interestingly, forecasts are changing about what they might do in future. Now, if you guys think about where the cash rate is, currently 3.6%, which if you add on the sort of profits that the banks want to make, let's say rates are around 6% at the moment. They could be lower, ideally around 5 point something, depending on your loan to value ratio, depending on how much deposit you have, depending on what kind of loan you're taking. Obviously, there's always caveats, but let's say between 5.8 and 6% is kind of the average. So if rates come down further, more people would be able to afford the mortgage repayments, more people would be able to take out a loan, which again increases demand once again. How do you guys see the cash rate trajectory for the next few months? Do you think there'll be more cuts, Ben?
It's hard to say. A lot of the major banks have sort of readjusted their forecasts for these sort of near term. I think, NAB is now said there's not going to be a cut until May 2026.
I know, sob. I'm so sad about that.
CBA is saying February 2026. Westpac and ANZ, I think, are still sort of forecasting one for November, but it's hard to say because you don't know what's going to be happening in the economy and that kind of thing.
Yeah, and I think actually both Westpac and ANZ also hedging, kind of being like, we think there might be one in November, which is the next rate decision, but they're like, it's really a close call, so it might be a hold.
Yeah.
I don't think anyone's saying prices will go, the cash rate will go up, but a lot of them kind of, NAB's one that came out before actually the cash rate decision this week was saying May 2026 will be the next reduction, and maybe that will be the last one. I think similarly, some banks are saying one more, some are saying 2 or 3 more next year. So you have no idea. It's quite hard to make a decision. So I think this is why brokers always say to their clients, the best time to buy a house is now. Because you just don't know what will happen. Even if rates do come down, house prices may still go up given all the demand. So you still kind of have this balancing act of what can you afford and when can you afford it.
And don't expect rate cuts. I think that's the thing, go through what you can afford without, expecting a rate cut. And then when the rate cut happens, that's, a little surprise.
Yeah. Like, then you can buy an extra fancy sofa.
Yeah. Or extra skincare.
Extra skincare and more coffee. Exactly.
But I think, what we've seen on the market mostly for investor rather than first home buyers, investors are quite happy because it's giving them a sweet window of opportunities where you've got a tiny bit less demand from first home buyers on specific markets. So because they've got like more cash flow or more, borrowing capacity, they can go and invest and buy their next investment property. And in some market, it's giving, first home buyers the advantage because less people enter the market because they don't have the borrowing capacity. So depending on which category of dwelling and which price dwelling you want to buy. But yeah. No crystal ball for us.
I know. I was really hoping you guys would tell me the answer of what the Reserve Bank's going to do. I have an inside track to Michelle Bullock there, but no, alas. But yeah, I think really interesting. And this, again, I think goes to show why it's so difficult to forecast what's going to happen, because even if the 4 major bank economists, the economists at the 4 major banks all have completely different forecasts, you're like, well, what am I meant to do here? Like, I don't have any guidance. And I think the Reserve Bank is also quite hesitant to provide any forward-looking guidance because, of course, anything could happen. We know from obviously historically, they kind of said that rates weren't going to increase for 4 years and they increased 2 years later or something. So they've learned that from that mistake. They're not going to do that again. But we never know what's going to happen. There could be, touch wood, but there isn't. But there could be another war. There could be something that happens to tariffs or the economy. There could be anything that happens that will change what the economy looks like. So I think just figure out right now what your finances look like and then kind of maybe talk to a broker around what that means you can do. Also, though, talking about rate cuts or lack thereof, lots of people were talking this week around what sort of things we're seeing, what happens when there is a rate cut. Now, for me personally, as a mortgagor, I haven't adjusted my repayments. I've kept them where they were, which means that I can pay off my loan a little bit faster. So I'm ahead of my repayment schedule, but not everyone is changing them. I always thought I was in the exception there, but it turns out I'm the norm, pretty much.
Pretty much.
Yeah.
And I'm the same as you. I'm like, oh my God, I can pay faster.
Yeah.
Less interest. But yeah, look, CBA came with news, like kind of like data. And they said that only 11% of eligible home loan customers have reduced their direct debit repayment on their mortgage since the August rate cut. And that's mostly millennials. Millennials, yeah. So from age 31 to 40, which is about 14%, which is twice likely as customers under the 20. So
I am definitely a stereotype then. I'm the least likely cohort to reduce repayments. Is that right? Or the most likely?
Most likely.
Oh, well, then I'm on the opposite.
You're on the opposite. So technically, millennials 31 to 40 are the young families. So not everybody, but they usually often have kids.
Yeah.
So when they can keep a little bit of money and spend a little bit more on the kids and the family, that's what they do.
That's true.
The 8% under 20 borrowers are cutting their repayments, and 11% of those aged between 21 to 30. So millennials definitely the most likely to cut. And the over 60s are the least likely to cut.
The boomers at the moment, they're living the dream, aren't they?
Man, they've got much more money.
Yeah.
They
They probably own their property outright. They haven't got a mortgage to worry about. If they do, it's very small. I mean, they've got their pension coming in. They're living the dream. Living the dream.
Yeah, I dream to have been born in the 60s, to be honest.
Yeah.
I
mean, even for that cohort that were most likely to reduce their repayments, it's still only 14%.
Yeah.
So that's still a small portion.
I wonder if that is because, it's a good point you made there about because families needing a little bit extra, they always need some more breathing space for their finances, especially if you've got multiple children. It can be very expensive. So I can see that. It's a good point that those sort of people with kids would probably want a bit more breathing space. So reducing their spends to the minimum repayment amount. But I think looking at everyone else, I wonder if it's just ignorance of knowing that they can actually reduce their repayments as the interest rate falls. Because obviously as the interest rate goes down, then your minimum repayment is less. So I wonder if people just didn't know that and then I've actually just carried on paying it because I didn't realize I could save some money.
I think there's two schools there. There's either the one that don't know or the one that are very aware that if they pay more, they repay faster.
Yeah.
So it's...
Pay less interest over the life of the loan, yeah.
So I guess in any case, they're benefiting from it.
Yeah. Well, there's been a lot that we've unpacked there about the home guarantee scheme, the risks, the rewards, the rate cuts, lots and lots that we've been talking about this week. And Emilie, thank you so much for joining us to talk us through what you're seeing. Yeah, it's been fun. Ben, thanks so much. Any nice weekend plans for you?
Well, we've got a long weekend in New South Wales, but
I forgot about that.
I forgot about it as well. So I haven't made any plans, but got to come up with something, I guess.
Long weekend, and apparently it's going to be 30 degrees on Monday. So lovely.
Yeah.
Any plans for you, Emilie?
Well, I'm going to the beach now.
Yeah.
Here we go.
We remembered it's a long weekend on Monday, but of course that does mean that we're going to be off on Monday. We'll still be producing the news for those who aren't in a public holiday. I think Victoria had theirs last week for the AFL Grand Final, so they don't get one on Monday, but we do. But we'll be back with you on Tuesday. We hope you have a fab week, and we'll catch you next time for another episode on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.